Hi, this is Charlie giving you Monday's video, and I hope you're very well. Before I go into the topic for today, just wanted to mention Kim's brand new product that's out, the Pivot Trader. I'm sure you've seen your emails on it. By all means, check it out. It's specifically really for day traders, but it's a great theory that he's developed with this. He's put so much work in over the last, I don't know how long, well, it's years worth of experience, plus a load of testing over the last, 6 months probably at least. And so what you get with that is you get all his statistics that he's put onto this site, the Pivot Trader, but more importantly you get the strategies, because the statistics are obviously very important, but you also need to know how to trade with those statistics. So he then puts all the strategies onto CD for you. So by all means check out that if I'm sure you'll have received emails from Sam on that. Right, okay, now I wanted to raise this week the thought that you can trade without using stop losses. Last week it came to my mind, well, last week really, because we had some visitors in our trading room, and a visitor, I'm sure he's probably watching this, but we'll just use it as a good example really, stated that he trades using mental stop losses, so he doesn't put physical stop losses in against his positions. And so he said that, well, yeah, but in the past he'd used physical stops, and he always seemed to find himself getting stopped out. So whereas now he doesn't use physical stops, and it seems to work for him. Well, that's fair enough, but there is a problem with that. He's a relatively new trader. I'll put that one in there. He's not an experienced trader. And the problem with mental stops is this. So let's put up some bullet points here. So if we're looking at, okay, mental stops, so what are the things that could potentially affect you if you're just using mental stops? Well, okay, let's just go through the basics first of all. Things such as a power cut, and obviously this guy's a day trader, so you've got power cut could affect you, or broadband outage could affect you. So if all of a sudden, I don't know, you had a power cut or your broadband went down, and the market at that point is moving against your position, how long is it going to take before you can call your broker and get through to your broker in order to close your position out? If the market's moving fast, you could lose a little bit more than you intended. Your intended position could be here, for example, but if it's flying, then all of a sudden you're taking a bigger loss. Okay, fair enough, you can probably handle that. So that's one thing. But the more important factor to me is, what if it's just on one of those days where, these things happen where they just build over a period of time. You might have had a good run, you might be a little bit overconfident at the moment, and it always happens at that time when you've got a little bit overconfident. And what happens is you get into a position, so I don't know, the price has been going up, you get into a position, let's say, I don't know, on a little pullback or whatever, and you've got a mental stop, let's say down here, for argument's sake. The position comes all the way down, and it comes down quite quick. The market comes down quite quick against your position, and so on this one you think, it's come down so quick that I've not managed to get out at my mental stop. I'll wait, because they so often come back up for me. They so often come back up that I'll get out when it comes back up. And it's that type of mindset that will develop and will happen at some stage. So at this stage it's not too big a deal, but what happens is the market really starts to press on, and all of a sudden you're thinking, oh, okay, it's come down a long way now, what do I do? So you're now way beyond where your stop loss was, and the sort of thing that can happen at this stage is that the trader says, well, okay, we're a long way from there, I know what I'll do, I'll go in again, I'll put another position in here, so I'll put another P2, let's say, position 2 in here, because then I can double up, so that then I can make back those losses quicker. It only needs to come up to, let's say, here. But what happens is the market then bounces, let's say, a little bit, but it's a shallow bounce, and then it just breaks down again, and then the trader is then sitting there, not knowing what to do, having doubled up their position. Maybe they even go and double up again, then they're getting there, and it's just carried on selling off. It's just one of those days that happens sometimes when it just sells off and sells off, and all of a sudden the trader's now sitting there towards the end of the day sweating in a position where they're now down a significant amount. and they don't know what to do. But then they're trying to keep calm, so they probably then think, okay, well, I'll hold it overnight because it was bound to come back the following day. And then, of course, the following day happens and it doesn't, and the market then just comes down again, and it just so on the daily bars, all that's happened is it's had that big down day, and then it's just going again. What started out as a normal intraday trade becomes an absolute train wreck, and all that as a result of using mental stops. So although you can get away with using mental stops, obviously, if you're strong enough, or got strong enough willpower to come out when your position goes against you, there is always that risk that at some point, at some stage in the future, the stars will be lined up in order to sort of get you. Maybe you just got out of bed the wrong way that day, and all of a sudden it's all not happening the way it should be, and the stars align, so to speak, and you could have been trading happily for 6 months, a year, doing this type of thing, and then in one day you lose the lot, sort of thing. And so I think that it was a really good discussion topic that we had in our trading room last week around the use of mental stops. Now, some people will say, okay, well, what I actually do is I get in a position here, I have a hard stop which is miles away, I don't ever intend on using that, but at least it's a critical stop which is miles away, and then but I still have a mental stop in here. Well, okay, maybe you can get away, you can trade with that, but at least you've got a hard stop in place. But it's a very dangerous thing to trade without stops, because at some point the market will move against you fast, rapidly, and all of a sudden you've got to make a decision when you're under pressure, and it's that moment that can become something which you never intended to happen. So I always encourage people to use stops. When we hear of traders doing this sort of thing, I have to come down hard on it, because I know the realities. The realities are you're much better off getting stopped out regularly and taking small losses than having that one day that might happen, a year down the line, maybe even 2 years down the line. Because if you read the Hour Between Dog and Wolf, and the author of that book did a lot of research on investment banks, and what he found was that some of these traders at the banks with their trading style, very aggressive trading styles, they could be profitable for 1, 2, 3, even 5 years. He said, but because they took such big risks, at some point the market will always come back and get them at some point, and they always did. And so don't think that you can escape it just because you might have had a good run for 6 months or a year. The use of stops is there to protect you over the long term. You have to look at it and say, well, okay, maybe I'm profitable with it right now and getting away with it, but actually at some point this type of event could happen, a one-off event could happen, and that could put pay to all the good work that I've done. So I'm better off using stop losses. So anyway, that's my point to be made today. Anyway, let's have a look at these markets. This euro's fascinating, isn't it? It's now done 1, 2, 3, 4, 5, 6, 7 days of sideways. I've discounted a couple of those days because Telecharts includes Sunday nights, but 7 traded days of chop, and it's chopping again today within this range. So we will continue to wait and see which way the euro is going to break. It's become a bit of a minefield there right now to see what's going to happen there. Let's go and have a look at the cable though, because cable's had a bit of a run here this morning. I'm recording this a bit late today. It's 20 to 1 in the afternoon. Now cable had sold off a bit last week, but it's coming back up again. So let's just see what happens with this cable. We could find another close above this daily 50, and I'll be looking for some more upside on the pound dollar. But I'm going to leave you with that. I've not really given you much there, have I? Let's have a look at this euro dollar again. Well, it's the same sort of thing. It's in a range. We've got to wait and see which way it breaks. So fairly simple there. Is there anything else I want to look at? No, I think I'll leave it there for today. Oh, I'm away on Friday. No, I'm not. I'm here Friday morning. Yeah, no, sorry. I'm flying out to Slovakia on Friday to do some presentations to some traders over there for Show FX World, and I thought I was going to be, but I'm not flying out until, I've not got to leave until lunchtime, so we'll probably still get the live trading in anyway. Right, that's enough of me mumbling. It's 9 minutes in. Have a great week. See you Friday.